Good morning, ladies and gentlemen. This is Butch Shorak, Options University, Friday, September 8th, 28th, 2012. Welcome. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. And we've had quite a week as we've had some interest in the week. Dallas Fed was on Monday. We went through Tuesday, consumer confidence, nothing much happening, very exciting here. Numbers weren't all that great, and then we got to today. Thursday, September 27th, 2012, started with durable goods orders. Durable goods are commodities that basically would last 3 years or more. Down 13.1%. So not exactly good numbers coming in this morning out of durable goods. All right, the next one that came out was GDP. GDP last quarter two, was pulled back from 1.7 to 1.3%. Again, not very good numbers. Then next came jobless claims. Jobless claims came in at 359,000. That's last week's unemployment numbers, and it was the first time in about 6 weeks that we've gotten better numbers than expected out of the jobless claims. On Friday, September 28th, we have personal income and outlays taking place at 8:30, 9:45 Chicago PMI, and finally at 9:55 we got consumer sentiment. What did happen on Thursday was that the indexes recouped some of the lost ground that they've been putting in for the 5 days when they were in a down cycle. Amid possible developments for stronger Europe, Spain focused on talking about some of their budget cuts, expecting a soft recession in 2013, but not talking about as much about spending more money as about spending less money. Speculation came out that China regulators are ready for some kind of stimulus to get their economy up and increasing. And so we had quite a day in the market for announcements, and let's see what kind of an effect that had on the S&P. As we look at the S&P, we are definitely in an uptrend. We are spending our time above this 30-day moving average. Notice what happened is we came down to that 30-day moving average and got a bounce. This was after about 5 days in a row of lower numbers in the S&P after a level of consolidation here. So as you can see, in fact, let's go to a little bigger chart so that it's easier to see. We see that what has happened on Thursday is we ended up with a higher high, a higher low, and a bounce off of somewhere near that 30-day moving average after a level of consolidation after the Fed meeting, which was that big candlestick, and we see that we finally got that little bit of a pullback that we were expecting and talked about when we last talked on Monday morning, and we got that pullback and pulled down to that 30-day moving average, and now we see that we've had a bounce out of the SPX. Next, let's take a look at the Dow, see if it followed, and we see that we did. We ended up with a bounce today out of the Dow, as the Dow starts heading back up again, going back into that upcycle in an uptrending index. Next, let's take a look at the NASDAQ, see if it followed the suit of the other two indexes, and we see yes, it did. Had a little deeper pullback, went actually below that 30-day moving average, and now that we've had a pop up, we see we have a higher high, higher low, and have reversed our cycle. So while it's in an uptrend, no question about that, we see we are now in an up cycle also, as we had 5 days down and now we are headed back up. Now let's take a look at the Russell 2000 and see if that over-accentuated more even than the NASDAQ showed us. And we see that, only came down to the 30-day moving average. Nice and pure, clean, got there. And on Thursday we saw that we reversed in that upward direction again. Again, an upcycle, an uptrend rather, with a upcycle now beginning as we got a higher high and higher low for the day of Thursday. Looking at the VIX, look at that thing pull right back as the fear leaves the market when we start going up, and we're headed back down to that area right around there at 13.5, which has been kind of an area that we've been bouncing around since basically the middle of August, with very little fear in the market, and as you well noticed, a decrease in the amount of volatility, and also a decrease in the amount of premium on our options. Next, let's take a look at the bonds, and we see that the bonds we're in an uptrend, and now you see that we are pulling back a little bit, and as the market goes up, we can expect that the bonds may pull back further, heading down to a lower level. We looked at TLT. TLT is our ETF that we look at for bonds. Next, what we're going to take a look at is XLF. XLF is one of the things we look at for our financials. And we see that that particular sector came down with the overall market, quite a downtrend. Basically, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days down. And now we are going back into that upcycle with higher highs, higher lows, but not a whole lot of volume today as we went to the upside. A rather low volume day. Not exactly the best thing we like to see. When we see it headed back up, we like to see it do it with volume to show commitment. Looking next at oil, we see that oil has been pulling back. It bounced a little bit with the overall market today, but we were well below that $100 a barrel area. This was USO, our ETF for oil, and we see that we've had a nice little pullback in that, well below the 30-day moving average. Next, let's take a look at the gold, and we see that gold headed back up. We've been consolidating, and we see that we're kind of trading in this range right in here. And so let's see if we head to new highs with gold, as there is that flight to safety that can take place with gold, as there is worry within the market. All is not quiet on the Asian front. All is not quiet on the European front, and we are very news oriented in today's current market and have been for quite some time. Entering into October, beginning of a new earnings season, entering in October, the beginning of a new time in the market. We'll see how October does. Usually a strong quarter, the fourth quarter of the year. Two strongest quarters being the fourth quarter and the first quarter. And we're going into an election, provides all kinds of variables for us to look at in the market. Looking at the spider, we see that after a consolidation area, we pulled back to that 30-day moving average, had a higher high, higher low today, but on lower volume. Now, one of the contradictions we have to the pop-up day that we got out of the market, we just as soon see the up days or the bullish days to show strength and show big volume. So we'll see how far we're going to go back up. Current target right up there around 147. We'll see if it actually goes up that high. So for those of you that are gold members, stick around and we'll look at our stocks to watch. Excuse me. I've had this laryngitis for about the last week, and it is getting better. I hope it's over soon. For those of you who want more free videos, go to www.optionsuniversity.com/free gold, as that's market recap for the fourth week, week after expiration, the last week in September. And this is Butch Chorak, Options University. It's Friday, September 27th, 2012, and thanks for being here. And welcome back to Market Recap with Options University, Butch Chorak, Friday, September 27th, 2012. And as we look at the S&P, we see that we have had a pullback to that 30-day moving average that we talked about last week. Expectations are that we are now looking for at least a bounce up to 1460, in spite of the fact that Thursday was not a day of large volume with that nice up candle. It was certainly greeted by some good news out of Europe, And we see that above us we have bypassed this resistance at 1440. Next resistance is up there at around 1460. We'll see whether we end up with a higher high. That previous high up there around 1474, 1475. So we're looking at a higher target as we now have entered into a new upcycle in this market that certainly is uptrending, and we have not seen that pullback in September. Now the only question is, will we see a pullback next week prior to earnings as the market corrects itself, expecting not big earnings coming out in this current quarter. So there's always this level of fear that's in the market, and not a whole lot of fear showing right now as we looked at the VIX headed back down to that 1350 area. Let's take a look, see what our stocks did during this week. As we see, we had 5 days down in a row, and now we've got a bounce up. Let's see how many stocks actually bounced up with the market. We talked about being ready for this and looking for this. We have a buy signal on Amazon with higher highs, higher lows, bounce off that 30-day moving average. Classic entry for those of you that are bullish. You can do whatever short-term swing trade you might expect, as you might get a few days up to the upside here to see whether we get higher highs overall above that, basically around that 265 level on Amazon. All right, next let's take a look at Apple, and we see we actually came down below that 30-day moving average with Apple, and we see now that we are bouncing up and got another buy signal today. So that buy signal still there in the morning as we have higher highs and higher lows from Apple. One of the market leaders, one certainly could say that more than once. Next, let's take a look at AutoZone. We saw we had earnings out of AutoZone. They obviously were favorable, and we could expect that we should head back up to that basically 390 level if AutoZone does go up with the overall market. So for those of you that are bullish, take a look at either your vertical spreads down here, look at your calls, buy the stock, ready for a swing trade. Only negative thing we saw today was that we ended up with a red candlestick on AutoZone. All right, next looking at CMG, we see the CMG came down, hit that moving average, ready for a bounce, did get a higher high, higher low. Look for we'll look for an entry on that with a target of around 350 if the market continues up for the next week or two. Next, let's take a look at Google, which only knows one way up as it's running into earnings. Earnings are just a short period away, so actually no time for an entry on Google as it has had an amazing earnings run. Green Mountain Coffee certainly pulled back below that 30-day moving average, and we see that it did get a buy signal today out of Green Mountain Coffee, and we could look for that to head back up to that 33 level if the market continues on up. Let's take a look at our medical equipment company, ISRG, and see what it did today. Went down below the 30-day moving average. Not a lot of action out of this. Might look at this for a condor and make money off both sides of this as a stock that's not really seemed to be going too far too fast. Then we'll take a look at one of the real winnings prior to the pullback, MasterCard, and we see that it did have a pullback with the overall market, gave us a higher high, higher low today. Entry signal for MasterCard to the bullish side with a expectations first high, first resistance at about 463, 464. So MasterCard also gave us a buy signal today as the market opened up. Now let's take a look at McDonald's, which has been running quite nicely, and we see that McDonald's is headed up, did pull back only one day, and should go back and reattach that. If the market continues to going up, McDonald's could continue on its upward climb as it comes into earnings, which are later in the month of October rather. All right, now let's take a look at Nike. At earnings, no big thrill, nothing big to be said about it, no big volume surge, nothing. So Nike looks like it just isn't doing it at this time. Next, let's look at Priceline. Pulled back with the market, did not give us a buy signal today on Thursday, so let's take a look at that. Still hasn't filled the gap from before. as we see Priceline trying to fight its way back into that almost $700 range that it was once in, and didn't show us anything today. Finally, let's look at W.W. Grainger. As the market was going down, it was heading up. It was that flight to a stable stock, and we'll see if we can break out. Entry on W.W. Grainger basically above 210 as we see if this heads higher with the overall market. Expectations are that earnings will come out on around the 17th, 18th of October. So headed into earnings, we could see a little earnings run out of W.W. Grainger. So we got a bunch of stocks. We're headed into earnings. October is the new month coming up next week. The week after a quadruple riching is usually pretty meager at this time of the year, and so far we saw a bit of a pullback as the market pulled back, SPX pulled back, all of the indexes pulled back, and so this is with Market Recap with Shorak Options University. It's Friday, September 27th, 2012. Have a happy Friday. Let's see what the market does on Friday. Look at that first hour to help you determine which way the market's opening, as it looks like we're headed into a new upcycle in our overall uptrend. And so we will see you again Monday morning looking at market forecast next week. Market Recap today says that the market has turned and put a little pivot in to the upside and should continue and follow through on that. Thank you for being here. Butch Shorak.